So a very big week ahead in the markets. We have, of course, CPI on Tuesday, FOMC the day after that on Wednesday, as well as quarterly Opex on Friday. So I do want to direct your attention here to this roughly 4,290 to 4,320 range that we're in right now, because this is going to be very important, specifically after the CPI print comes in on Tuesday. Depending on the direction of the gap on that day, for example, if we were to gap up over this, then that would likely set the trend for the rest of the week. Now, of course, there are a couple events that we have to watch for. So some things that I am looking at, if we do have a gap up above here on the day, is looking for the gap to hold. That would be more bullish if it was able to hold within the day, because we are pretty overextended to the upside. Even if we did have a gap up above, your best chance at taking a trade would be a retest of roughly this 4,320 level. Remember, this is right about at that August 16th high level that we had earlier in 2022. That was the last major bear market rally that we had. So it's not necessarily a surprise to see a hard rejection from up here. There was a pretty large seller that stepped in here on Friday that was able to send price back down to roughly this 4,290-ish level, which also was a retest of this trend line, as you can see here, this blue one, which you can go from the high pivot here on SPY to this pivot over here on Wednesday. And then you can see we did retest it right at the lower end of my demand zone, which was previously a supply zone for SPY. So we had a nice convergence of both the lower end of the demand zone as well as this blue trend line. So it bounced off of that. So you are going to want to look at this roughly 429 level, as well as what I just said earlier, this 4,290-ish level going into this week, because if that breaks, that will lead to more downside, specifically back to this around 426 level. Of course, it is acting as a support right now, but this is the key pivot that you want to watch leading into these events this week. So you can set your trading bias based on where price is in relation to this pivot around this 429 level, because again, a break back below and you'll see a pretty quick flush back down to the 426 to 427 range, just because this was a chop zone before. So this would act as a fake breakout above. Whenever you see chop before a breakout like we've seen right now, but it turns into a fake breakout, you actually tend to see a flush once price goes back into the previous consolidation phase. That's not all the time, but that generally is the case whenever you see, again, chop followed by a fake breakout, which means it have to fall back down. You tend to see a flush back down to the lower end of that consolidation zone, which would be about the low of 426s. So keep that in mind if this is the case. Now, of course, with CPI coming up, we're going to see a large either gap up or gap down after that. But again, keep the SPX levels in mind. Gap down below would be trend to the downside up until this 4,250 level. This is a retest of the 2018 high pivot, which I've shared in previous videos. So this is the nearest large support. If we were to have a gap down after CPI, wherever that may open, the trend would be decisively down till about 4,250, where bulls can then attempt to have some form of a bounce off of it. Again, we do have FOMC the day following CPI, so that can bring for a lot of volatile price action. For example, a gap down sends price to this lower level, followed by upside after FOMC. So we will see what happens. But again, do make sure you take note of these levels, because with all these events comes a ton of volatility. It's going to be way too difficult to predict what would happen after the events. So it's better to note these levels, have a general idea of what you'd like to do with them, and then execute based on what happens following each of the events this week. So again, keep that in mind. 4,250 would be the nearest support if we were to have a gap down after that CPI. And then also in the inverse, a gap up above this 4,320 level. You do want to see it hold, because if it's unable to hold, which is a possibility, because again, we are very overextended right now, and then you would see a pretty decisive move to the downside. Also remember that JPM collar is right about at this level of 4,320. We typically don't see much price discovery over at least the call resistance, as we call it, on a JPM collar until right about the end of the sequence, which would be end of this month. So we still have a couple weeks left until that time period. So my bias would be a continuation of the downside that we saw on Friday throughout this week. Again, there's going to be some up and down volatility because of all these events, but the general consensus at least seems that we will have continuation of this rejection, and there'll be plenty of trade opportunities in either direction depending on how the events go. So you can look for that. Another thing I do want to talk about here is the dark pool levels feature here on Cheddar Flow. We saw yet again another week of a lot of premium hitting the dark pools. You can see over here, just based on Wednesday of last week specifically, we saw a $3 billion print. And then also, if you go over here to Monday of last week, we had a $3.3 billion print. If you've been watching these videos for a while, you know over $3 billion is definitely eye-opening opening, especially when you see two in the same week. We've been looking at a ton of premium now for the past month, and I keep talking about it in every single video, but it's very important to note this just because whenever you see this amount of premium within a specified range, it tends to act as either an accumulation phase as well as distribution, or a distribution phase for institutions which have access to these dark pool exchanges. And you can see based on the levels that they had these orders execute, 3.3 billion at 427.92. And then if you go back over here to Wednesday, you can see that 3 billion print was also right around that 428 level. So both of these right around 428. If you look over here just based on SPY's chart, again, we're super overextended from the downside. We haven't really had any major downward move since that mid-March downside move that we received because of the whole bank fiasco. But now you can see we're in some form of a breakout stage, at least above the previous consolidation, as well as the large consolidation that we saw earlier, all the way back around this time period in April through early May. But still, we are above even more consolidation afterwards. So it seems very unlikely that these prints around 428 are a sign of buying. Yes, we did close the week even higher above it, but institutions tend to not have a FOMO and try to chase a rally, especially when it's this extended. They tend to buy near the dips, generally speaking, of course. But in the case of dark pools, especially the sheer amount of premium we've been seeing lately, seems very unlikely that they are buying up around this level. So around that 428 level, if we do have a gap down below that, whether it be because of CPI or during the FOMC meeting, we see a break below that level, then that can lead to a lot more downside, and we'd end up going very likely to this 4,250-ish level for that retest of the 2018 trend line. So watch for that. If 428 is broken, there can be a lot more downside that persists afterwards. So keep that in mind going into this week. Also, Apple, I want to talk about. You can see we had another bounce off of this blue trend line. This blue trend line goes all the way back to 2020, September of 2020, actually. So it's been almost 3 years that this trend line's been intact, and it's worked like a charm recently. You can see we've had rejections off of it. We've had this act as a support numerous times. You can see over here, just within this day, acted as support a couple of times over here, and over here. And we bounced off of it based on Thursday and had continuation later on Friday. So this trend line, very critical. And I'll show you on the daily chart what it looks like for people that haven't seen the recent videos. You can see here, it's acted as a channel in a sense. We've had a break above as well as below the channel, but for the most part, acted as key resistances as well as support all the way since September of 2020. So this trend line is very key going forward, especially because if Apple were to break it to the downside, which so far it's been able to stay above, but if Apple were to break it to the downside as well as fill this previous gap from over here, that would confirm a lot more downside to around 171, which is our previous key support right from back around this time. And of course, if we were to go back to 171, that would have implications on the rest of the market, especially because Apple has been one of the strongest tickers so far in terms of big tech. So if it were to break below, then you'd likely see some form of a pullback in the overall market, with Apple being the highest weighted stock in both the S&P 500 as well as the NASDAQ. So keep this level in mind. For people that don't have it drawn on their charts yet, I would suggest you do that. And it's right about this 178.30 to 178.40-ish range that you're going to want to look at for this week. That of course can change just based on the angle of the trend line, but it's right around this range for simplicity purposes. So you do want to note that for this week. Again, if CPI were to have some form of a gap down in the market, and we saw a gap down below here for Apple, then that can have a lot more downside afterwards, which can hurt the rest of the market. But as of now, it's been working well as a support. So it's just something to watch for this week if we do see that break below. And one last thing I'd like to mention in this video, which I mentioned in the last weekly video we did on Sunday, was the VIX call flow, because we saw a ton of it on 2 Fridays ago now. And yet again this week, if you look at the historical flow tab on Cheddar Flow, you can see we saw even more VIX call flow. 8.9 million print over here, 1.3 million print, 4.7 million print. All of these calls and all of these were out the money. As you can see throughout the entire week, we had a lot of these prints, specifically between June 8th as well as June 9th, but still nevertheless very uncommon to see consistent amounts of million plus prints that are out the money for the VIX. Pair that with what we saw in the previous Friday as well. It seems like there's either a lot of hedging going on around these levels or also potential directional bets of volatility approaching, especially for this week when there's 3 major events. We'd likely see some form of hedging, but also in terms of a directional bet, they could be betting on a spike to, let's say, around that 19 to low 20 range, just because they expect volatility to pick up with a lot of people hedging ahead of these events. So we saw a lot of this last week. Expect expect some form of an uptick in the VIX this week. Just seems like that's very likely to happen because it's been beaten down for so long right now. So it could be looking at some form of a relief bounce with all of these events approaching here, especially if we get a downside move after either CPI or FOMC. We're likely going to see some form of a bounce, in my opinion, here. Again, with how oversold it's getting now, and after it's just been falling for such a while, it doesn't mean that it has to be an exact bottom on the VIX or it just continues to the upside for a while afterwards. But still, I'd expect some form of a spike this week. We'll see if that ends up happening. But the flows behind it so far, technically speaking, super oversold, at least on the short-term charts. So you tend to see some form of relief bounce after that, especially paired with all of those large events this week. So we'll see what happens to the VIX this week. But otherwise, appreciate you guys watching this video. Again, very eventful week ahead. Do be careful and have patience, especially this week with your trades, because it's going to be very volatile. And other than that, I'll see you guys on Wednesday for the next video.